Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Big tech's strong start. US futures extend gains after a bumper first quarter for Microsoft's cloud revenue and advertising growth at Meta. A deal is done. Washington and Kyiv agree a plan for US access to Ukraine's natural resources, seen as critical for keeping the White House involved in the peace process. Plus, risky business. President Trump acknowledges his sweeping tariff program is a political risk, but says he won't rush trade deals for nervous investors. Happy May the 1st, happy May holiday for many people, of course, in Europe. And European markets are closed across the board. 7 straight days of gains, though, for European equities. We'll see how they reopen, of course, on Friday. Maybe subdued volumes, with many people staying at home tomorrow as well. FTSE 100 futures here in the UK looking to add 0.5%. There is the optimism coming through in terms of, it seems, piecemeal progress in terms of those trade negotiations. And then, of course, stellar earnings coming through from Microsoft and Meta. Amazon and Apple are up next later today, of course, for the US. US futures then. S&P E-minis looking to gains of more than 1%. What a session yesterday, with a drop at one point of 2% before being corrected to end in positive territory by thin margins. But nonetheless, we haven't seen a mid and intraday correction like that to that extent since around 2022. Nasdaq 100 futures looking to add 1.5%, again on that tech optimism. Let's flip the board and have a look across asset with a focus on the Japanese yen. The BOJ standing pat as expected, but pushing back its forecasts and expectations as to when it meets that price target, that inflation target. So you're seeing softer yen on the back of that. The uncertainty, again, around Trump's tariffs, causing a little bit of fog over in Japan. They want to hold and get more clarity before they go with any further hikes. Currently at 50 basis points, of course, in Japan. So the Japanese yen under pressure today, down 0.6% versus US dollar at 143. The 10-year at 418. Currently stateside, moves at just 2 basis points in terms of the yield on the benchmark. Brent is at $61 a barrel. Currently flat. Expectations you get more supply from OPEC Plus and its members. And gold also seeing some losses in the session, down close to 2%. A bit of reallocation out of that haven, maybe again on the trade story, and some optimism, moderate optimism at least on that front. 3,200 on the yellow metal. Let's get to the tech earnings story then, because Microsoft and Meta shares surging in late trading after the tech giants reported better than expected earnings. Speaking on an earnings call, Meta CEO Mark Zuckerberg, of course, told investors he is optimistic despite the tariff-induced uncertainty.
We've had a strong start to the year. Our community keeps growing, with more than 3.4 billion people now using at least one of our apps each day. Our business is also performing very well, and I think we're well positioned to navigate the macroeconomic uncertainty.
OK, let's bring in Charlie Wells right now for the details on the earnings on the tech front. So we hear it there from the CEO, of course, of Meta. And to some extent, it's counterintuitive. We saw the data yesterday out of the US. The economy is slowing. Meta gets 98% of its revenues from advertising, and yet things are holding up for this business.
Things really are holding up. And I think, on the ad revenue front, Meta effectively is an ad company, right? They get so much of that revenue from advertising. And I think, look, ad revenue is a little bit of a bellwether, an economic bellwether, and so it looks like that spending from companies is holding up. But I think what's interesting, I think why the market liked this so much, is the fact that advertising is looking like a natural place for AI. I think there have been so many questions about where do we deploy this? What businesses does this work well for? And Meta is able to show that, they can target ads using AI, they can personalize using AI. And so this is just a use case that's going really right for this company right now.
What about Microsoft on the AI piece? They play in a slightly different area, but of course they have their cloud as well for Microsoft. It was a beat top line. What are the details that came through?
There's a really interesting linkage here, right? So Azure, their cloud services unit, posted 33% growth in the quarter. And interestingly, the company attributed 16 percentage points of that growth to AI. So again, this is a company that is able to demonstrate sort of how AI has a compelling use case for them, right? They can kind of sell more expensive services to customers using some of these AI features, Copilot, etc. So that's benefiting them. But also interesting on the AI story, and adding a little nuance here, their capex went down for the first time in a number of years. And I think this is helpful in a lot of ways because it indicates, maybe this is prudence. Maybe we're finding kind of footing as far as just how much to spend. Maybe not too much, but just the right amount.
Yeah, really interesting that they're seeing a bit of a slowdown in capex, even as that demand. They're still not able to meet the demand for data centers. I wonder if Apple and Amazon derail the positivity around the tech story with earnings out later, because they have their own idiosyncratic challenges, but also, of course, the trade challenges and the catch-up when it comes to AI for Apple.
Tom, I think you're kind of hitting the nail on the head there, right? Mag 7 is not a monolith. And I think we've had the software companies, Microsoft and Meta, but this is hardware we're talking about, right? And Apple produces so much in China. There's so much tariff uncertainty on that front. And then Amazon, interestingly, is also a China story, right? There are retailers coming out of China, but it's not just retail that I think we're going to want to dig into in Amazon reports. It's also the logistics. It's the advertising that a lot of these Chinese sellers rely on as well that makes money for Amazon.
Charlie Wells, thank you very much indeed. With a wrap of the tech earnings and looking ahead, of course, to Apple and Amazon later today. US futures then higher this morning, and that is, as we mentioned, partly down to the optimism around the tech earnings story. The US GDP print, though, showing that the economy contracted in the first quarter, as we mentioned, for the first time since 2022. President Trump is blaming his predecessor for the weak economic data.
Core GDP, and this is, you probably saw some numbers today. And I have to start off by saying that's Biden. That's not Trump, because we came in on January. This is the quarterly numbers. Let's give us a pass on the first month. We were sort of getting a little bit used to things.
Let's bring in Bloomberg's Valerie Titel for the gauge on this. Val, do we give the president a pass then on the state of the US economy?
Look, Tom, there were a lot of hot takes on this GDP number yesterday. Yes, it was the worst number we've seen for a quarterly print for some time. But people arguing on the bullish side that it was all due to this drag of imports, the reason why GDP came so negative. If you strip out those net imports, which is that green bar here on the bottom, and just look at personal consumption and fixed investment, it was a pretty solid number. And if you expect that net import number to basically wash away in the next quarter, it still is leaving the U.S. economy with a very good baseline run rate. Now, Tom, the U.S. equity market was all over the place yesterday, but what you need to know is that it ended higher. Those month-end rebalancing flows really helping drive the equity market over a percentage point higher in the last 30 minutes of the trading session. We're now on a 7-day winning streak for the S&P 500. S&P futures over the last 8 days up nearly 9%. It's good news for the equity market. Also great news for the Treasury market. The rally continues across the Treasury curve. Those 10-year yields, another 7-day winning streak as well. Over the last 8 sessions, down nearly 23 basis points in the 10-year yield. Now, this movement of late has really kind of washed out the move for the month of April. Take a look at the April scorecard. I mean, what a wild month it was. But the S&P 500 ended just marginally lower by 0.8%. 10-year yields also marginally lower by 4 basis points. So really, if you take a look at the month of April from a big overpointed view, it really doesn't look like much happened. You have to look at the U.S. dollar, had its worst month for a few years, and also crude oil having its worst April basically on record. A lot of that due to the fact that we've revised down the global growth projections for the rest of the year.
Yeah, you can certainly imagine the Treasury Secretary Scott Bessent, busy as he is with those trade deals, will be celebrating the moves lower in yields on the benchmark 10-year, currently at 4.18. Bloomberg's Valerie Titel, thank you very much. To Japan now, and the macro story there, because the BOJ has kept its benchmark rate unchanged as the global trade war clouds the outlook there. For more, let's bring in Bloomberg senior editor Brian Fowler, joining us out of Tokyo. Brian, not unexpected, of course, fully expected, in fact, that the BOJ would hold pat, but maybe some interests in terms of the forecast coming through from the BOJ. We'll hear, of course, from Governor Ueda later. What are your key takeaways?
Yeah, so that's absolutely right. Virtually every economist we spoke to expected the BOJ to stand pat on policy, but all the focus was on the new forecasts that were contained in the quarterly outlook and comments on where the BOJ thinks inflation is going to go, when it thinks it will reach its target. So first, on the forecast, the BOJ slashed its growth forecast for this year and next. The GDP for this year was cut in half to 0.5%, which is pretty anemic. And the BOJ also released forecasts for the fiscal year starting in April 2027 for the first time. And a key point about there is that the inflation forecast it issued for that year, the core was 1.9%, and the core, which excludes both energy and fresh food, was 2%. And that's important because that's right at or very close to the BOJ's 2% target, which implies that whatever the problems for the economy coming from the tariff war, the BOJ still thinks inflation will persist, and that also keeps it on track for further normalization with rate hikes in the months ahead. It did say that it expects to reach its target for underlying inflation trends to hit the target in the second half of its new outlook period. So that with that new year added to the end, that does kind of push that back a little bit from where we previously thought it would be. And it also probably means maybe a lower terminal rate at the end of this cycle, probably a slightly flatter trajectory for interest rates going ahead. But economists we spoke to do think the BOJ will continue on the path to hikes, maybe not in the next June or July, but maybe in September, at least one said. And a former BOJ official, Wakatabe, who was on TV a little bit earlier, said that he thinks the BOJ is mostly concerned about CPI and more than GDP. And so that's why the inflation figures are important. He thinks the BOJ will stay on the path towards rate hikes.
OK, on the path still to rate hikes. A stand, of course, from the BOJ today, as expected, but maybe, as you mentioned, a slightly lower terminal rate. Bloomberg senior editor Brian Fowler with the context. Excellent. Thank you, Brian. To a corporate story with the impact, of course, on tariffs being felt in the aerospace industry. Airbus saying it won't cover the cost of tariffs on planes imported by US airlines, setting up a clash with the carriers. The plane maker's CEO says its customers are not willing to pay the levies, but, quote, it's on them. I'm joined now by George Ferguson, senior aerospace, defence and airline analyst for Bloomberg Intelligence. George, how unusual is this dynamic within the airline industry? Someone surely has to give on the two sides of this. What is the impact likely to be?
Well, so I think that in the long term, the impact is likely that tariffs are going to get lifted on aircraft. And that's what Airbus said on their earnings call yesterday. We've seen them use some innovative ways to try to get around tariffs. Delta is a pretty important customer. It looks like Delta's taken some wide body deliveries where they'll be using the airplane outside the country. It looked like Japan in this instance where they're flying routes from Japan. Look, not every airline has that, the network like Delta and the capability to take a tariff, again, take an airplane away from U.S. jurisdiction. I think, though, that there's enough intertrade between the U.S. and Europe that there will be ultimately an agreement on airplanes. And so I think Airbus and their customers are really hoping that this is temporary. And once it gets lifted, they can get on with business as usual.
OK, and as you say, until that agreement is done around aircraft, the challenge is still there for the airliners. A lot of the airliners, of course, withdrawing their forecasts. US airliners withdrawing their forecasts for 2025. The margin pressure is going to come through. How are they adjusting to higher tariffs and lower usage by their consumers?
Yeah, so I mean, right now, the U.S. airlines really don't have to deal with tariffs because they're looking, I think, at the back half of the year and really cutting down their deliveries or the delivery expectations based on tariffs. That's airlines like Delta. And yeah, it's a very competitive market right now in the U.S. What we're really seeing is the consumer, especially I think at the bottom end of the scale, really a bit pressured, not flying as much. And so load factors are falling. Could be some weakness in fares. So it's a very competitive environment. And they can't bear more costs. And so I think they're all looking at ways to make sure that they're not bearing more costs. They definitely don't want to be bearing tariffs. I think you'll see them cutting capacity as we get into the back half of the year.
OK, expected to see cutting of capacity for some of these airlines in the back end of this year. George Ferguson with the insights, senior aerospace, defence and airline analyst for Bloomberg Intelligence. Thank you. Here's what else to be thinking about today then. 7 a.m. UK time, Lloyds Banking Group earnings. We'll be breaking those down for you. Of course, it's been a solid run in terms of the bank earnings generally in the UK, but also in Europe as well. We'll see if that run continues with Lloyds at 7. At 3 p.m. UK time, on the data front, it's US ISM manufacturing gauge. That comes out. We'll be breaking that down for you as, of course, the data yesterday around jobs and, of course, and the broader economy cause concern for the markets. And on the earnings front, later today, it is, of course, Apple and Amazon set to report. How is Amazon adjusting to those 145% tariffs on US goods? And what is Apple's AI play looking like? Coming up, after fraught negotiations, the US and Ukraine sign that minerals deal. We have the details next to get us closer to a ceasefire. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The US and Ukraine have signed a deal over access to the nation's natural resources. Kyiv hopes the agreement will secure President Trump's support in ceasefire talks with Russia. Let's bring in our EMEA News Director, Ros Madsen. What are the key details then of this deal? It's finally been signed.
Well, that's right. It is slightly different from the earlier versions because there were quite contentious negotiations that went on for weeks over the terms of this deal. And of course, we know that the original moment back in February when the Ukrainian president went to the White House to sign this deal and things went very wrong in the minute with US President Donald Trump. So what this is about is future licenses for natural resource projects in Ukraine. So that's everything from oil and gas to critical minerals. Those are things that Donald Trump is very interested in, lithium, graphite, and so on. And the profits from those new licenses going into a fund that's jointly managed and where the US has first priority on the profits from those funds. And that's ostensibly to help reimburse the US for any future military assistance that they give to Ukraine. But it also does give the US quite a lot of control over potentially a big part of the Ukrainian economy, depending on how these projects evolve. And what it does, the US would say, is it binds it economically to Ukraine. So that's a strong level of support for Ukraine's future. It doesn't involve security guarantees, official security guarantees on the military side. So it doesn't mean the US would come to Ukraine's defense down the track potentially. And that's still a key point that's missing from all these conversations around a ceasefire is what does the future military support for Ukraine look like?
Well, Ros, on that part then, to what extent should we see this as a consequential piece in terms of the move towards that ceasefire that President Trump obviously so dearly wants?
Well, it does keep the US involved, obviously, in Ukraine from an economic standpoint, which they again would argue is a sort of security guarantee. And it gives Donald Trump a win in a week and a time of 100 days when he really wants to be able to have deals announced and in his back pocket. But there's a lot we don't know yet about the pathway to a proper ceasefire between Russia and Ukraine. We can see that the rhetoric in a way from Russia is hardening. They're saying there's a lot of issues to be worked through. They've got some very big red lines themselves around territory and so on. And we seem to be quite away from getting to a formal understanding about a ceasefire. There's not a lot of progress either between Russia and the US on that front, or even the idea of Russia and Ukraine at some point sitting down together. So the idea of a rapid ceasefire seems to be off the table for now. This does give a step towards something, at least in the eyes of the US. It will keep Donald Trump engaged in the process, but we're still quite a long way here from a formal ceasefire.
OK, our EMEA News Director, Rosalind Matheson, with the context on that deal. Finally signed, but still some work to go in terms of getting a full ceasefire between Ukraine and Russia, of course. Coming up, we're going to switch focus to the banking space with a lens on Spain. BBVA's proposed takeover of Banco Sabadell is one step closer to reality. We're going to look at the details and the implications for Europe's banking sector. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Spain's Antitrust agency has approved BBVA's bid to buy smaller rival Banco Sabadell, but with conditions. The opening trade anchor Kriti Gupta, who's been watching this very closely from the offset, joins me now on set to talk through what is going on. What are the details? What do we know at this point?
Well, this, if it goes through, and we are getting one step closer to that, would mark the largest domestic banking deal in Europe since going all the way back to 2006 when UniCredit acquired HVB in Germany. So this is a really, really big deal, and we're kind of talking about opening the floodgates to potentially banking consolidation across Europe, even though this specifically is a domestic deal. Let's talk about next steps first, though. As you mentioned, the first piece of this is that we are now opening ourselves up to about a 15-day period here where the Spanish government can come in and say, we need to check the work of the CNMC. That is the regulatory authority there. If they do need to check in the work, which, by the way, is largely expected, given Pedro Sanchez's administration has been very vocal about the kind of downsides or potential downsides of this deal. There's a political battle raging in the background that we can get into in just a moment. After that 15-day period where they can agree to potentially check the work, if you will, of the CNMC, they have 30 days to do just that. So we're looking at about a 45-day period where the actual Spanish government can make some sort of calls about whether or not they think this deal can actually go through. Then you have the CNMV, which is the markets regulator that is going to look at kind of all the plumbing of it and say, is this actually good or even productive and will have limited impact to the actual financial system of Spain. And that's when you get the tender period if all of those approvals come through. So we're still about 45 days away from that, but an early sign that they are getting approval for this deal.
OK, so that's the time frame. Why could this deal, you touched on this, consolidation, why could this deal be a catalyst for consolidation across Europe?
Well, it's fascinating because it's coming just a couple weeks after you had the Italian government comment on the likes of UniCredit and the banking consolidation in that region as well. And that's dealing with a slew of smaller players really being taken over by the likes of Banco BPM, Mediobanca, UniCredit, you name it. But the core concern is the same, that the smaller banks, or in this case Banco Sabadell, really is banking for smaller and mid-cap companies. And you can see that in the regional breakout of not just Spain, but the likes of Italy as well. You even see it in parts of France. So the concern here from the fiscal government of Spain, Italy, and arguably France as well in terms of some of these tie-ups is that if there is banking consolidation, one, the bigger players will be able to basically decide the lending rates at a higher level that may not be tolerant to smaller and mid-cap firms that use those banking rates, as opposed to having that kind of competition. And that's where the concern lies for a lot of these banks and these fiscal governments. It looks like those hurdles are getting cleared because some of the remedies tackle exactly that. OK, Kriti Gupta, thank you very much indeed. In the update in terms of BBVA and Banco Sabadell and the at least tacit approval for now, and we'll see that 45-day timeline. We'll be getting Kriti back on, I think, to give us updates on that story and the consequences as well, potentially for broader consolidation in the European banking space. Kriti Gupta spoke with BBVA's CFO, Luisa Gomez-Bravo, as part of Bloomberg's Chief Future Officer series. Very timely. You can watch that now on YouTube. Now, some other stories making the news this Thursday. A US judge has ruled that Apple violated a court order by not opening up its App Store to third-party payment options. In a scathing ruling, the federal judge said Apple must stop charging commissions on purchases outside its software marketplace. The judge referred the case to federal prosecutors to investigate whether Apple committed criminal contempt of court for flouting her 2021 ruling. Apple says it will comply with the ruling, but plans to appeal. Qualcomm's shares fell in extended trading after it gave a tepid revenue prediction for the current quarter. The company says sales will reach as much as $10.7 billion, but the midpoint of its range was below the average analyst estimate. The outlook renews concerns that the smartphone market will suffer from the unfolding trade war. Coming up, President Trump admits his tariffs have a, quote, perception problem, but insists deals are on the way. We discuss the turmoil in terms of how this is impacting the markets, the focus, of course, on levies. We'll bring in eToro global market analyst Lale Akoner next for how to position. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Big Tech's strong start. US futures extend gains after a bumper first quarter for Microsoft's cloud revenue and for advertising growth at Meta. A deal is done. Washington and Kyiv agree a plan for US access to Ukraine's natural resources, seen as critical for keeping the White House involved in the peace process. Plus, risky business. President Trump acknowledges his sweeping tariff program is a political risk, but says he won't rush trade deals for nervous investors. Let's get to the markets then. European markets largely closed, of course, for the May the 1st holiday. Here in the UK, markets will open. Futures are pointing higher by 0.7%. Worth reflecting on the fact that we've had 7 straight days of gains now for European and US stocks. Talking of which, US futures currently pointing to upside of a little over 1%. That's after quite a volatile day yesterday, of course, on the macroeconomic data and then turnaround in sentiment on some of the tariff and trade deal news and, of course, the tech earnings. So a strong session flagged for the US, looking for an 8th straight day of gains. Nasdaq 100 futures looking to add 294 points on that tech optimism. Apple, of course, and Amazon are next up with their reports. Let's flip the board and have a look cross-asset, where the focus is on the Japanese yen. The BOJ standing pat as expected. The rate remains at 0.5%, but the future and the forecast clouded, of course, by the trade war launched by President Trump, and the BOJ is pushing out their timeline in terms of when they expect to meet that price and inflation target of 2%. 4.18 right now in the benchmark US 10-year. Yields just currently up 2 basis points. A little bit of selling coming through from treasuries, but stable across the treasury curve. There's the Japanese yen, then currently down 0.8% on what we've been hearing from the BOJ, and there'll be a presser later at around 7 a.m. UK time from the Bank of Japan's Governor Ueda. 144 right now on the yen. Brent, currently, of course, broadly under pressure, but up at about 0.1% today. There is a bit of concern about supply coming through from OPEC+, but today just gaining 0.1% at $61 a barrel. And gold down 1.8% on that haven at 3,230. Now, let's turn to the latest on Trump's tariffs. Chinese state media reports say Washington has reached out to Beijing to initiate talks on tariffs. The Trump administration has previously said it's up to Chinese President Xi Jinping to begin negotiations. Meanwhile, Bloomberg understands the European Union is planning to share a paper with the US next week to kickstart trade negotiations. The proposals include lowering trade and non-tariff barriers, boosting investments in the US, cooperating on global challenges, and purchasing US goods, including liquefied natural gas. This all comes as President Trump acknowledged that his sweeping tariffs had a perception problem and that he would not rush deals to appease nervous investors. Bloomberg's Valerie Teitel joins us now. Valerie, just tie all of this together then. Another busy 24 hours in terms of movements around trade. Possibly and arguably, most importantly, the reports that the Trump administration is now reaching out to China.
Yeah, that's right, Tom. It does seem like there is de-escalation ahead of us on the tariff front. But Trump first admitting there last night that they are politically risky, but he is not in any rush. And I want to argue, Tom, that maybe he's just emboldened by the fact that the markets in the last week do feel very calm. The S&P 500 is on a great winning streak, up for 7 straight sessions. Take a look at the chart behind me. S&P futures up nearly 9% in the last 8 days. And the exuberance doesn't end with the equity market. There is a big calm as well in the Treasury market. There has been a 7-day winning streak for U.S. 10-year yields. They're now down some 23 basis points in the last 8 sessions. Tom, a lot of this movement of late has really clouded how bad April was for the equity market at one point. At one point, we were near hitting a bear market, down 20%. We've rebounded from that strongly. If you take a look at the month on from a wide angle, S&P 500 is down only marginally, and those 10-year yields, they're lower on the month as well. The dollar still had a bruising month, one of its worst in a few years, and that crude oil down nearly 19%. It was its worst April on record.
Bloomberg's Valerie Teitel, thank you. I'm joined now for more on these markets by Lale, Akoner, global market analyst at eToro. Lale, thank you for joining us in the studio bright and early. I'm quoting for you right now, do not underestimate the US. The US is a quality market filled with world-leading companies that warrant a core portfolio position despite near-term headwinds. Have we been reminded of that by the results coming through from tech?
Yes, I think so far it's going great. for the tech earnings. We're obviously looking at what they see for the second quarter as well. Their guidance will be very important for us to understand whether the tariff policy coming from the administration is going to affect their supply chains, their demand and in certain parts of the economy, and obviously their pricing as well. So it's quite important.
More broadly across the markets, as Val was pointing out to us, 7 straight days of gains for the S&P 500. Is that a recalibration? Does it have further to run, or is it a sign of complacency?
I think it has further to run. Breadth is not as strong, I have to say. It's only like 10% of S&P above their 20-day moving averages. Still has room to run, but so far it's quite positive that the administration's rhetoric is leaning positive. Obviously, the most important thing is for the real economy that this doesn't drag any further, right? So I'm more optimistic for the market's direction going from here rather than the real economy. The real economy really needs some clarity in terms of, again, adjusting their decisions for businesses, consumers. But overall, market has been oversold. And as I said, in the U.S., we have a lot of high-quality companies, cash-generating companies that are now quite cheap. So it's a good buying opportunity.
It's a good buying opportunity now, even though we don't, because there will be those who say, look, the soft data is looking a little concerning. The hard data will turn in May, at the end of May and in June, as the tariff impact and supply chain crunch really comes through. But now is a buying opportunity. Do you not need to see that clarity on the economy first?
I think it's a buying opportunity. The reason being that, again, we were at the middle of an easing cycle coming from the Fed, right? So the Fed has a lot of room to ease if things get worse from here, which, again, soft data, to your point, has been tanking. Hard data so far is good. We are looking at the labor data, especially. The micro labor data will be very important. It looks like the businesses are hoarding employees in terms of there are not much firings, but there are not much hirings as well. We are going to take a look at that. But as I said, the Fed has ample room to intervene if it has to, which gives us a sort of like a more positive outlook on the economy and the market. Granted, again, that we really need to see these trade deals come sooner rather than later.
So this is a buying opportunity. Which segments of the US markets would you look at right now?
We like financials very much. Again, the steepening of the curve will help their margins. We like healthcare. We like industrials as well. Those are the places where you see a positive revenue growth for the next quarter or so. So, again, U.S. value is a good place to be. Small to mid caps, in my opinion, a good buying opportunity as well.
There's cash on the sidelines.
Yeah.
Are you seeing any indications that comes off the side? What would need to draw that money back onto the sidelines and how back off the sidelines? And how would you want to be positioning about that? How much of that is a tell?
Again, any trade deal coming forward is going to help, right? Whether it's going to come from Japan, India, even a more positive stance towards China will help that cash come into, say, equities. It's been coming off of fixed income a little bit towards the, again, the short end of the curve, going to gold as well. Any clarity, I would say, coming from the U.S. would help.
Has gold overrun? Or is it you still want to add that?
In the short run, I think it has overrun. I think it's like 30% above its 200-day moving average. But in the long run, I think it is a very good volatility hedging potential. And that still stays in place. And I think it has proved its position as a safe haven as well.
Where do you find margin resilience in European equities?
Europe, we really like defense because we are seeing that,
That's not counter consensus. That's a consensus call.
Exactly.
But you think the window is still there to add in
maybe
defense?
towards the more mid-cap sector rather than the large cap, because large caps have already priced in that positive news. But we are looking at more mid to small caps, especially in Germany, because we're seeing that willingness from the new administration to implement these huge spending plans. So
okay, interesting. Yeah. Okay, mid to small caps in defence with a particular lens on Germany stateside, looking maybe at financials, healthcare as well. There is a time to add to the portfolio, and it could be now. Lale, thank you very much indeed. Lale Akoner, global market analyst at eToro. Coming up, we're going to speak with the co-founder, talking of defence, of British tech firm Arondite on how AI could help soldiers better communicate on the battlefield. That conversation is coming up. We stay focused. We'll do a deep dive on the defence space and a startup in that sector. This is Bloomberg. British tech firm Arondite has secured $12 million in funding to help people use AI to connect to an ever-increasing range of defence systems. Will Blyth, Arondite's CEO and a former British Army officer, also formerly at Palantir and Helsing as well, so some deep experience both in defence and defence startups and defence software, joins me now. Thanks for coming to the studio. What does this fundraise mean? So you've raised about 12 million in total, the latest fund rounding being led by Index Ventures. How are you deploying this capital at a time of increased defence spend?
Yeah, thanks, Tom. Well, I mean, Arondite is a defence technology company. We're based here in London, and really what we're doing at the heart of what we're about is a mission to help the UK and its allies to get ready for the robotic age by making teaming with machines as simple and flexible as teaming between humans. And I think people know this from their own lives. If it's in a company or in a sports team, if you can't communicate with the people around you at all, it's really then quite difficult to go and solve complex problems. So what we're doing is building the software and AI to help join up systems, no matter who's made them, and help users to then team with those safely at scale.
How do you distinguish yourself then from what is being offered by your former employers, Palantir and Helsing, because they also operate in this space? Interconnectivity between all these different hardware components is crucial, but also challenging.
Yeah, it's an absolutely central problem to the future of defence, and I think and beyond defence, I think wider industries are seeing this wave of change and having to tackle it. So I think the key here is as the number of different systems explodes, the challenge becomes less how do you find a point system that can go and solve a specific problem for you, and it's much more about how do you orchestrate those systems at scale, and then in doing that, how do you make sure that humans can maintain the control that they need to have when they go out and try to use these systems together.
Are you shipping product now? What's the reception been? How quickly, how rapidly are you signing up clients? And are you able to do that? Are you signing the primes? Are you signing defence contractors? Are you signing with the DoD? What is that story looking like?
Yeah, so there's a product. It's called Cobalt, and it helps us to do all these things for customers. And it's something that it's already shipped. We've already signed contracts with defence customers. Right now, our focus is on working directly with defence, so that means the public sector. And we were also, of course, in discussions, collaborative conversations with a range of defence companies as well. And the nature of the industry is that you tend to need to be open to collaborating and building consortia to go after problems together. So it's a competitive industry, but it's also one where you see lots of different companies teaming together.
Are you seeing the agility from the Defence Department, the DoD, civil servants? Are they tapped into this? Are they showing the agility needed to adapt some of the proposals, some of the software solutions, some of the hardware solutions being created now by the startup scene?
Well, I mean, I'm
be honest, Will.
Yeah, I mean, I'm hugely sympathetic because having been in the military and having worked in some of these areas where you're trying to introduce new technology, it is not a simple challenge, and there's a reason why consistently across the world you see defence organisations really struggling to get this right and do it in a first-class way, and that's because it's the problem you're trying to solve is moving. You have an adversary who's doing something on their side, trying to mess with what you're doing, and it's just a tough problem. I think what I've seen over the last, I'd say, 5 or 10 years in the UK and Europe is that defence in general and ministries of defence have noticed that the pace of change is speeding up. The pace of change really is moving to a more software-defined pace of change, and with that they are slowly changing their acquisition methodologies. But of course, it's not happening as quickly as we would want and they would want.
Are your solutions being deployed in Ukraine right now?
Yeah, so we're not disclosing right now who we're working with at this point, but I
mean, I guess, are you getting in the field feedback?
Yeah, absolutely. So, I mean, it's a critical part of how we think about building the product, which is, you need to be working closely with users. You go out and add some value as quickly as possible, and then work with them to understand how they're actually using it in the field, what they actually want from the product versus what you thought they might want at the start, and then iterate really closely with them.
What are the challenges to scaling?
Well, I think from my perspective, there's never been a better time to. I think defence technology at the moment is undergoing a huge change, and I think the United Kingdom and Europe, with everything that's going on geopolitically right now, means that there's really never been a better time to try to bring some positive change and to try to enable defence organisations to cope with this wave of change that they're going through. So I think there's every reason to believe that you can build a large global company by tackling the problem we're going after. It's one that's right now we're focused on trying to help defence, but actually there's a societal wave of change here about how do organisations of all kinds team with robotic systems. So I think there's a lot of tailwinds behind it.
OK, well, thank you very much indeed for coming in. On the back of that fundraise, we'll see how the business, of course, unfolds in the defence space. A lot of focus, and we'll see as well if you benefit from that defence spend coming through from the UK, Germany and others. Will Blyth, thank you very much indeed. With that experience in the military, but also Palantir and Helsing, CEO now of and co-founder of Arondite, having raised a total of $12 million US. Now, rockets, electric cars, and now a new city. Staying on tech, Elon Musk is about to put his stamp on a new government. Yeah, as residents near SpaceX's rocket launch site vote on whether to officially incorporate the area as its own city. Almost all of the eligible voters work for the company or live with someone who does. That's the focus of today's Big Take, and I'm joined now by Craig Trudell, Bloomberg's Global Autos editor. Our cars are. Craig, talk us through exactly what is happening here, because Elon Musk isn't just making his impact felt in Washington, D.C., but also in Texas.
Yeah, I mean, if there's anything that we've learned over the last year or so, it's that Elon Musk has some thoughts about the way the world should run. He will have a sort of unprecedented opportunity to really, have quite a say in how this tiny little village on the southern tip of Texas is going to operate going forward. This is an area known as Boca Chica. It will become Starbase, and there are 3 people running unopposed who have ties to SpaceX who will make up the government of this city. I think, the story here, has some great reporting about sort of what is likely going into this. I think, Musk wants to have a situation where he's able to, launch rockets, sort of one after the other without interruption, without any sort of red tape. And in addition to wanting to do that and not have to sort of answer to a county, I think he also wants to locate a lot more of his workers down there and build housing down there. So this will help him to do that in a smoother and more efficient way.
Yeah, some pesky birds and wildlife getting in the way for Elon Musk, it seems. We also have this intriguing story about the board, apparently, according to the Wall Street Journal, reaching out and seeing if they could find someone to take a successor, ultimately, for Elon Musk, on the concern about his involvement with Doge and how much time that was taking up and the impact on the brand. Tesla have come out in the last half an hour or so and denied that pretty categorically. Give us the latest on that story.
Yeah, it's an incredible story here, from the Wall Street Journal. I think there's no doubt that Musk has been spending a whole heck of a lot of time in Washington and in Florida at Mar-a-Lago with the president. I think Musk himself spoke to this idea last week that there's real concern about what that's doing to Tesla and concern about his need to going back to the company to look after the business and try to repair some of the damage that he's done to the brand. I don't think he necessarily spoke to that brand issue in a way that was particularly helpful, because he was quite defensive about it. I think, the question I have, reading the Journal story, of course, is just how active the board is actively how the board is thinking about potentially bringing someone in. I suspect that it may be a dead issue now that Musk has said, look, I'm coming back. I'm putting government work aside. And I do think that the board is in a real bind here in terms of, if you take Musk out of the picture, what does that do to the value of Tesla stock? they may be stuck with him, and whether he wants to be leading this company or not, he may be stuck leading it.
Yeah, Dan Ives of Wedbush are putting out a note suggesting this was a game of high-stakes poker between the board and Elon Musk, and he thinks Musk will be at the helm still for another 5 years. OK, Craig Tudell, thank you very much indeed, Bloomberg's Global Autos editor. Here's what else to be thinking about in terms of a new edition of the Bloomberg Weekend newsletter, where you can get deeper analysis, feature pieces and profiles that provide unique insight into the latest news from around the world. You can subscribe, as you can see there, at bloomberg.com/newsletters. Plenty more coming up. Stay with us. This is Bloomberg.
China is not behind.
Anybody Are they ahead of you?
China's right behind us. I mean, we're very, very close. But remember, this is a long term. This is an infinite race. There's no, in the world of life, there's no 2 minute end of the quarter. There's no such thing. And so we're going to compete for a long time.
NVIDIA CEO Jensen Huang speaking with Bloomberg's Anne-Marie Hordern in Washington. Of course, the producer of those AI accelerators, which go into the data centers, of course, that are being built out by hyperscalers like Microsoft, which came through with beats across the board, essentially, for this business. Tech is to the rescue for these markets. We'll see if that theme continues with, of course, Apple and Amazon later in the day. The revenue is getting to above $70 billion for Microsoft. The Azure cloud business, revenues jumping 33%, 16% of that coming from AI. And in the current period, they forecast sales and revenues above estimates. So positive across the board for Microsoft. Let's flip the board and have a look at how the picture shaped up for Meta. 98% of the revenue, of course, coming from advertising. So you would have thought maybe in a period of slower economic growth for the US, this company might be vulnerable. But they're holding up in terms of the numbers that came through. Also a beat and guiding the current quarter as well. Also in line with estimates. Expecting to spend more, though, because of the impacts of tariffs on the cost of infrastructure. Spending now flagged potentially up to $70 billion in terms of what is coming through from Meta. Let's give you the preview when it comes to Apple and Amazon. Slightly different stories here. The vulnerability arguably more acute when it comes to the tariff hit, particularly for Apple. To what extent are they going to be shifting their supply chains? How are they going to take in the cost of those additional tariffs? What about the China piece as well? Both on tariffs, both on the slowdown in terms of the consumer there. Those questions, no doubt, will be put to executives when those earnings come through, and what detail we get on that story. When it comes to Amazon, it's all about the supply chains as well for the e-commerce businesses. Cloud probably going to perform quite well. You saw that story coming through for both Microsoft with Azure, but also Alphabet as well. I should say, of course, Amazon's cloud business also perform well, but arguably it's about the supply chains and how they absorb tariffs as well. Those earnings coming through later today. Will the tech momentum continue? The opening trade is up next. I'll give you more analysis on that story, plus all the macro. Stay with us. This is Bloomberg.